GM, good morning. Welcome to the Milk Road Show, the daily crypto show where we bring clarity to a market that's treating every data point like it's the final clue in a murder mystery. I'm your host, Jay Hamilton. It's Friday, April the 4th, and everyone wants to know what the heck is happening right now. We had Trump's Liberation Day this week. Markets nuked and responded as you would expect. More uncertainty, everybody. Where are we headed? What does the rest of the year look like? Are we going to go into a period of stagflation? What does that mean? Also, we're going to take a look at what's going on with Bitcoin. Bitcoin obviously entered a period of price discovery when it hit new all-time highs of 109 back at the end of last year. What's next? What happens when Bitcoin enters these periods of price discovery? If we look at historicals, what does that mean? Today, to break this all down, we're joined by Chris Kuiper, Director of Research at Fidelity Digital Assets, an institutional grade investment and services for digital assets. Now, before we jump in, guys, we launched a really cool new feature over at Milk Road Pro, and that is Token Snapshots. Our first Token Snapshot is on Aerodrome. So if you're interested in learning more about Aerodrome or diving deep into the bull and the bear case, you might want to click the link in the show notes. Go Pro today to get that. Today's episode is brought to you by MoonPay. Trade crypto fee-free, fast, and on your terms. It's also brought to you by Coinshift, powering top crypto treasuries with their yield-bearing stablecoin, CSUSDL. Chris, welcome to the Milk Road Show.
Yeah, thanks for having me. What a day, huh?
What a day. Should we take a deep breath and maybe meditate with everybody? You know, how do you
Sounds
get
like a good
through
idea.
days like today? Okay, let's start with the obvious. What's your thoughts on how the market has responded to tariffs and another week of new news coming out of the current office?
Yeah, days like this, you're always reminded of what's priced in and what wasn't priced in. It becomes obvious after the fact. So, I used to be an equity analyst. So, whenever you have these big jumps, that's a market signal saying it was not expecting something. If news comes out and it was exactly as expected, the markets wouldn't move, right? So, obviously, all of these tariffs were not expected, or they're much larger than the market expected. I was just looking at a chart of historical tariff rates in the United States. Depending on how many of these go into effect and at what level, if we get up to 20 to 25% on an average, or looking at all goods, that would be the highest rate that we've seen in the US for overall tariffs in about 100 years, a century. So this is certainly significant. It's certainly not what was expected. And so that's why you're seeing such a major reaction sell-off in the equity markets today.
Yikes. Yeah, you nailed it when you said it clearly was. Everyone expected that this was going to happen, but not to the degree that it happened. What's your macro framework right now for the rest of this year? Because let me tell you what I'm hearing a lot on the show and the various guests that we've had is there seems to be still a bullish belief. And that is coming from there's all the tailwinds on the fundamental side and maybe less on the macro side that have set us up for regulation coming, the strategic Bitcoin reserve, governments buying, all these, the de-risking of Bitcoin. Like there's all these tailwinds that everybody feels really good about. But then macro is obviously causing all markets to struggle right now because of a massive amount of uncertainty. We haven't seen uncertainty like this in like 15, 20 years. When you step back and look at the current economy and the current macro setup, how are you thinking it through?
Yeah, you mentioned at the top of the show that word stagflation. And in our 2025 look ahead report, we put this out every year, comes out at the very beginning of January. One of the sections I wrote, I said, why is nobody talking about stagflation? And yeah, you've got my tweet up here where I revisited this, where it seems like people are finally talking about it. You just said it. I did a Google search trends where it looks like it's picking up again. And we had a Bank of America survey of institutional fund managers with 71% saying they expect stagflation in the global economy over the next 12 months. So The contrarian me says like, well, now if everybody is saying it and thinking of it, maybe maybe it won't come true or it's already passed or something. But if you break that down, stagflation, of course, being stagnation, so a period of lower growth or perhaps even negative GDP growth. And then the deflation part is referring, of course, to inflation. Now, I presented this thesis or idea early in the year when I interviewed Tom Lee of Fundstrat, and he disagreed with me on the inflation part. He said inflation's coming down. The way it's calculated, especially with rents, it's going to continue to tick down. And he's right. Trueflation, this measure of real-time inflation, is very low right now, like 1.35 it's showing. Even the official CPI has come down to 2.8. But I think there's a couple of things to look at. Number one, of course, wasn't forecasting or expecting tariffs, but tariffs, in my opinion, are inflationary. They are a tax, right? So you are going to have to pay more for goods, and that some of it usually does get passed down to consumers. But of course, it can always depend on how it's implemented. But the other thing to think about too is CPI to me is just a form of inflation, or really the subsequent action of inflationary monetary and fiscal policies. So it's the result of policies further up the line. So when you add liquidity to the market, you have things like QE, or money printing as people call it, or you have a lot of fiscal spending like we saw during COVID. The result is then the inflation you see in consumer prices. And so that's a bigger way that I look at it in terms of my macro framework that you mentioned. So to me, really, what you want to look at is there inflation at that higher level? And sometimes that trickles down to consumer goods, sometimes it doesn't. If we get lower spending, lower growth, I would expect CPI, the inflation everyday consumers, to actually go down. So in agreement with someone like Tom Lee. But if you look at what the response is going to be at the fiscal and monetary level, we've just got headlines crossing of whether or not the Fed will cut rates again, that sort of thing. If you look at inflation at that level, that is where I see we could see more inflation. And then you're going to see that either in consumer prices or asset prices. And so what I'm watching very, very closely right now is gold. And it seems like if people are talking about stagflation right now, why aren't they talking about gold? It's very odd that gold has been outperforming all kinds of things year to date. It keeps going up to new all-time highs. And at least to me, I don't know about you, but it feels like hardly anyone's talking about this. And yeah, you have this chart up of historical period from the 70s and 80s. Everyone thinks of this time as like, oh, it's a time of high inflation. There's actually two waves of it, right? There's a first wave and a second wave. And here you see the wave of CPI going up and gold moving before it. And then the second wave, the same thing happens. So I think people really need to be watching gold now as well.
And then how do you think about Bitcoin in correlation to gold?
Yeah, so this is really interesting to me right now because up until this point, at least, Bitcoin has acted as this risk-on asset. And you see why. Something with high volatility, traders and investors just lump it in with other high-risk assets. And so when they're in a speculative they want to take on more risk, they're going to go out to things like Bitcoin and even further out on the risk curve, other digital assets or crypto, right? And so that's why you'd say people were saying, is Bitcoin and other digital assets, is it just a tech stock on steroids? And I'd have to agree with them. That's how it traded. And I would say it's not the same thing. Fundamentally, these are two very different things. And I can pound my fist on the table all day and say that. But if traders are going to treat it like a tech stock, that's how it's going to trade. But now I've been in the camp of saying someday, hopefully, we will see a decoupling when investors realize Bitcoin is not a tech stock. And it's fundamentally different. And therefore, you should treat it and trade it differently. And so now, just these past few days, it's still much too early to tell. So I'm not willing to say anything definitively. But we now have a few data points where NASDAQ has sold off. The high growth, high beta, high risk tech stocks are selling off big. And Bitcoin's being flat. So is this that decoupling that we've been waiting for, or at least I've been waiting for? Maybe, again, too early to tell. But this is also why I bring up gold, because I think if you look at the macro environment once again, what was really interesting yesterday was that the dollar sold off on all these tariff announcements. And you would think in traditional macro world, if you have a lot of tariffs, you're going to import less. That would actually strengthen your currency. So the fact that it sold off was quite telling. And again, it's just one data point, but this could be for two reasons. I think one, the market is looking further down the line and saying this could hurt us and our competitiveness, so the dollar should be weaker. And or number two, the world is trying to de-dollarize, and this was just another data point for them to reinforce that thesis. We've seen, of course, the US is the global reserve currency of the world, but we've seen countries continually take few steps to de-dollarize and move away from that. And is this just another data point to confirm that? And if it is, what are they going to instead? So usually, we run a trade deficit. That means we import more than we export. So these other countries that run a surplus, they've got all this capital. What have they traditionally done? They've recycled it back into the US economy by buying our stocks and mostly our treasuries. Mm-hmm. Now they're increasingly buying gold. Why? Because they potentially want to exit this system of just recycling back into the US, and they want something that's outside of the geopolitical system. They want something that's neutral. And for thousands of years, that has been gold. But could it be Bitcoin? Of course, if you read our research, we do think Bitcoin has all the great characteristics of a credibly neutral monetary good, and then some. It improves upon a lot of these characteristics that's needed. But what it doesn't have is the track record. And so that's the big question for me. Will people try to exit this system through Bitcoin? I think some will. The question of how much or how many will depend on how comfortable they are with it at this point. It's still pretty early. It's still a nascent technology, and gold has been around there for thousands of years. There's all this infrastructure in the international finance world built up around gold with gold markets and everything. So we'll continue to watch, but that's the biggest thing that's got me the most interested with all of these latest moves.
Mm-hmm, mm-hmm. So much to unpack here. First comment I want to make is I also agree with your take that Bitcoin is traded like a risk tech stock, even though it is fundamentally digital gold and trying to be digital gold. But it does, as you said, it seems like we might be seeing this decoupling happening right now. And that would make sense because we do have different investors buying Bitcoin that we never had before. I mean, Abu Dhabi bought, 500 million approximately of Bitcoin in Q1 of this year. They're not buying that as a high risk tech stock to trade it. They're buying it as digital gold. And so it would make sense. And other governments as well, probably. I think there's some governments that are silently buying Bitcoin that we don't know about. Michael Saylor obviously buying it for these reasons. Like, there is a growing portion of the Bitcoin buyers that are buying it in that fundamental thesis that's very different than the past crypto natives or the traders that, as you said, have been buying in the past. So that's one reason why I think this shift is happening. The other thing that I want to mention is I want to go back to macro for a second, because I'm trying to figure out, like, what are the scenarios and the probabilities of how this might play out. So the one that is being presented most to me, and I'm trying to get more broad in terms of the different ideas and different cases that we can present on the show, because quite frankly, I'm hearing a lot of one case right now, which is this bull case that believes that no matter what, from the Fed side, if growth slows, Jay Powell has said, hey, I'm comfortable. I see tariffs as transitory inflation. I'm comfortable lowering rates if I need to. And as you said, we're getting indication that rates might lower. And there's people just saying, well, we're at 4.25% right now. Technically, we could go to zero, right? Not saying we will, but technically we could. And so we got a long way to go. If growth slows, we can deal with that. Basically, the Fed can deal with that. So that's the one case. The other case that I'm hearing is everybody saying, well, with the US debt crisis, they have to figure out a way to deal with the debt in the short term, and therefore they have to print more money, add more liquidity, and therefore risk assets will go up eventually. So it kind of all leads to this, like, short term, nobody knows. How long does the trade war last? How does this all get resolved? Don't know. Nobody can get inside Trump's head. Good luck even trying. But it feels like in the medium term, there is this bull take that asset prices, particularly Bitcoin, ends the year higher. Please challenge me. Tell me I'm wrong. Like, if you disagree with me, I would love to hear it.
Yeah, I agree with you on the overall macro setup that, or the overall thesis that you have to create more liquidity, global money supply. If you look at a chart of global money supply, I had one up on Twitter the other day, or X, excuse me. It always goes up overall. I mean, there's little periods where it dips a little, but yes, this one here, you always see it going up, and you see Bitcoin following it. Now, of course, correlation doesn't equal causation, but we have done some pretty simple statistical analysis on this. Like, is this statistically significant? Yes. Is it, does it have a high R squared, meaning does the change in global money supply predict or explain, I should say is a better word, the movement in the price of Bitcoin? Yes, it's got a R squared of like 0.775, even 0.8 at times. So that means 80% of the move can be explained by the change in the global money supply. And I'm a simple person. It's like, if you're looking at this a very long-term time horizon, that makes sense. If you're measuring Bitcoin in dollars, and the growth of dollars is growing faster than the growth in Bitcoin, which we know it is. We can measure both of these on the supply side. Then all else equal, of course, demand has to be the same. All else equal, the price of Bitcoin must rise. And that's what we've seen. So that's very simply the very long-term view. I completely agree with you there. And if you don't believe that, then you have to say, well, the global money supply is going to go down. Well, why would it ever go down? Like, every tool in the policymaker's toolbox, whether it's on the monetary side with central banks or on the fiscal side with governments, it is always to print or spend more. There's all different ways and means and names for these things, but at the end of the day, that's what they all fundamentally are. Now, you can debate whether that's good or it's bad, or whether it's needed to soften economic things. Those are political choices and questions, but economically at its root, that's what it is. And that's the main thesis for Bitcoin, as you know. So fundamentally, yes, that's where this is all going, in my opinion. But in the medium term, I guess to give you a bear case on it, it would be swinging back to Bitcoin and these other digital assets being viewed as very risky assets. And so if there's a contraction in risk, if there's a contraction in liquidity, there's a lot of debt in the system. If that gets unwound or repaid, which is a contraction to liquidity, that is what could bring Bitcoin and other digital assets down in the medium term. People are going to sell off what they can, right? It's the old adage of Wall Street: you don't sell what you want, you sell what you can. And Bitcoin is the most liquid market out there. It's recognized now all over the globe. It trades 24/7. So if you're getting margin calls, if you need to make debt repayments, and you've got Bitcoin, that's what you're going to sell. So that would be the bear case against all of this in the medium term.
Let's be honest, everything in crypto comes with fees. But here's a nice surprise: MoonPay Balance doesn't take a cut. You heard that right. No MoonPay fees when you buy or sell crypto with your MoonPay Balance. Top up with dollars, pounds, or euros, then you're ready to trade instantly whenever the market moves. And if you change your mind, withdraw your cash. No MoonPay fee there either. Simple, fast, ready when you are. Check it out at milkroad.com/MoonPay. Disclaimer: network and ecosystem fees apply. Meet CSUSDL, the stablecoin built for institutions and DAOs. Don't just hold basic stablecoins, earn yield, all without compromising security. Backed by regulated real-world assets and secured with institutional-grade risk management by our friends at Steakhouse Financial, put your treasury cash to work, earning native yield and protocol rewards. Built by the team behind Coinshift, which is trusted to manage over $1 billion in business treasuries on-chain, including Aave, Gitcoin, and hundreds of leading institutions. CYCS USDL is gaining traction at milkroad.com/Coinshift. And the one thing that seems uncertain is how much this trade war is going to impact GDP. Like, what is going to be the impact on growth and on the economy? It has clearly had an impact already. You can see it in the data, but there seems to be, again, I guess it really comes back to, if we can decouple from that tech stock case and be seen as digital gold, then we should be fine regardless of what happens on the growth side, because gold would continue to go up most likely, and so would Bitcoin. Therefore, am I getting that right?
Yeah, I think you're correct in that they'll likely hurt hurt growth, not only from just like it's a pure tax, right, which is a drag and can lower demand, but it also can hurt growth because of the knock-on effects. And the biggest one, in my opinion, is the uncertainty it brings. So you're going to start to see CEOs and people who have to plan for their company's future and whether they're going to expand or grow, and they're going to say, this is all too uncertain. They're just going to wait it out. So that's another knock-on effect there. So if growth slows, again, it's probably bad for digital assets in the short term if people are still viewing them as like a risk-on growth type of asset. But again, think of the second order effects. How will that recession or slower growth be combated? It's probably going to be combated with the same old tools that we've always done of fiscal and monetary policies trying to juice the economy back up. And in the long term, we've shown that's good for especially Bitcoin, right? But in the short term, anything can happen. And that's why you could see people retreat away from it. But one thing I do want to highlight with all of this is all uncertainty, right? We said that word so many times, it brings so much uncertainty. I hope people come to see Bitcoin in particular, and some other digital assets as well, as something that they can have certainty about. Because it's transparent, it's audible, you know the rules, the protocol rules, you know the issuance schedule, you know all of these things. And so in a world of uncertainty, this is something that potentially stands out as something quite certain, in my opinion.
Well, and you mentioned before the direct differences between gold and Bitcoin. There's one right there, right? Bitcoin provides much more transparent certainty of supply than gold does. We don't even know how much gold is in Fort Knox, right? Like, what was the last time Fort Knox was audited? 50 years ago. So there's a check mark for the Bitcoin versus gold argument as well. Okay, I want to shift it to Bitcoin and your thoughts on Bitcoin price and Bitcoin price discovery. Where are we now, and what do you see coming? You guys have written some great reports about this recently.
Yeah, we've had a number of great reports from an analyst on our team, Zach Wainwright, and he's actually got the latest one on our website. You can see all of our research at fidelitydigitalassets.com. So he's come up with this model. It's quite simple but powerful, of just two variables. It's what percentage of addresses are in profit on the network as a whole, and we can see this on chain. And then what percentile is volatility in? Is it in the top 5% or is it below? And so you've got two factors. You've got four different permutations of that: high volatility, low volatility, high number of addresses in profit, or a low number of addresses in profit.
Is this the chart that I've got up here that you're talking about right now?
Yeah. So there's a few other ones on here, but it creates a 4-phase cycle, and Bitcoin goes through these 4 phases with pretty regularity, which is very interesting. There you go. That's a great one there. So you see the reversal phase when things are coming down, bottoms out, starts to appreciate, and then he's notably said we are definitely in the acceleration phase, and that's when you've got high volatility. We certainly have that, and you have a high percentage of addresses in profit. Now we have dipped a little bit below that, so even in these phases, you can have certain days that go into another one. But the point is, you zoom out and you look at where these big transitions are, these phase shifts. And again, this is a backwards looking model. It's not necessarily predictive, but it is important to know because Bitcoin has gone through these cycles. And so if we're in this acceleration phase and we're already well into it, at least historically, we would have been moving up a lot higher. We're at a key point here because either we're going to get this acceleration blow off top like we did in the past, or we're not, obviously. And if we don't, this will be the first cycle that doesn't have one like that. So it would be quite different. The other thing that could be going on is these cycles are just getting longer. He looks at all 4 cycles in the recent research report, and you can see they've all taken more and more days to get to that blow off top cycle. So that could be the other possibility here, is that yes, it's still in that phase, but it's just taking longer than the past. And that's why I think a lot of people are feeling so despondent right now on the Bitcoin side, because if you look at the 4-year compound annual growth rate, it's still high, like somewhere around 15 to 17, 18%, I think, if I remember right. Whereas just a few days ago, before this recent crash, the 4-year compound annual growth rate for the S&P was around 13. So you didn't get that much more return for taking on multiple times the amount of risk or volatility. And that's why I think some people are getting a little tired because they would have expected a little bit more this time around. But I think that could just be, once again, because you're only looking at the past 4 years, it could just be the effect of this cycle this time taking a little longer. But again, we'll see how this plays out.
Yeah, that's exactly all. That's what that says to me. What that says to me is macro is caused this delay. It's just changed this cycle. It's come in at a point where nobody expected tariffs in this way, and this current shift in regime at the scale and the speed that Trump and his office have done. Nobody expected that. I mean, maybe somebody did, but I certainly didn't. And as a result, we're just, it's kind of like we're delayed, like we're in pause and wait. Now, obviously, if this delay, if this trade war drags on and there's no end, and then I also don't know, growth will slow and we might enter a recession, and that'll play out the way it plays out. But as you said, even if that does happen, the fiscal policy is going to be what they've done since 2008. We had Matt Hogan on the show from Bitwise earlier, and he puts it the best. He says they're just going to hit the easy button. No politician or central banker in the world has shown that they're not going to hit the easy button in 20 years. So why would I don't see them changing tune now. So yeah, it's just, to me, all this says is like when macro does get stability and we do get certainty and we flip from uncertainty to certainty. And I wish there was I feel like it's like we say that word so much, and I wish there was like a chart or something I could show everybody to show when this is going to change, but it's not, doesn't work that way at all. But when it happens, it feels like and look, not financial advice, do your own research and all of that, but it feels like there could be a big pump to come, because all of this data has shown us that in the past, that is what has occurred. And the tailwinds would say, hey, there's a lot of people interested in getting into this game.
Yeah, I tend to agree with you overall because Bitcoin is so scarce, and if more and more people are, as you said earlier in this show, becoming the holders, like they're holding it for the long term, they're not trading it, that's going to lower the supply and increase the scarcity as well. So if you get a big demand shock, that's really going to pump the price. But to play devil's advocate against that, there's been a lot of talk in this space ever since I've been in here of, do the cycles continue? Do the cycles ever end? Do we just get to a point where we don't have these cycles anymore? So there is a third possibility where you don't rocket to the moon, you don't crash to the ground. You at one point just become a large enough asset class that as adoption grows, you just constantly kind of grind higher and move higher, and you don't get these big swings anymore, or you stay flat for a long time as well. So investors, you talked about probabilities. A good investor, I agree, should always think in terms of probabilities. So I think that needs to be considered as well. And you have to make sure you're equipped to handle that play out as well, of just no cycles or a long grind sideways as this gets adopted, and it takes time.
Mm-hmm, mm-hmm. And I think that is exactly, too many investors, too many crypto investors in particular, don't think in probabilities. They only think in like very simple, I'm here for 100x mindset, which is like not a well thought out mindset. And what it leads to is the state we're in now, which is a very interesting position, where you have retail sentiment at all-time lows and fear is so high. And then last week we had it was last week or the week before, we had DAS in New York, the Digital Assets Summit by Blockworks, and you had incredible bullishness coming out of that, and incredible enthusiasm for the future of digital assets in America, not to mention the stablecoin bills that are going through right now and the market structure bill that's going to come. Like, if you had said to us that we would have these things 6 months ago, possibly, like, if people are saying it might come mid-year, not even end of year, which I can't wrap my head around that they would move that fast. We'll see. But like, it's just, it feels, the sentiment is so far, and I think it is because so many people are not thinking in probabilities, and they're only thinking up only, and their expectation is up only. And then when it doesn't go up and we have these sideways action like we see right now, they get very fearful and they want to leave, and they rage quit or they hit the exit button, which is a dangerous thing to do. You can comment on anything there if you'd like to.
Yeah. I just want to say I couldn't agree with you more on that first part of the sentiment versus the actual actions that we've been seeing, shall we say. It's just, this is such a big theme that I can't believe we're here. You nailed it when you said 6 months ago, if someone would have told you, we're going to get these executive orders, we're going to get movement on stablecoin bills, we're going to get more companies than ever holding at least 1,000 Bitcoin on their balance sheet than before, corporate adoption accelerating, all these things. And you said, what do you think the price of Bitcoin will be? Someone would probably say multiple times higher, right? And this is just a great example of how markets keep you humble. You cannot know, even if you knew the future events, you still wouldn't be able to correctly predict the price magnitude or even the direction, right? So let that sink in for a second. Like, even if someone gave you a crystal ball and said, I will tell you everything that's going to go on in Washington and corporate adoption, all these really bullish things for Bitcoin, you wouldn't have been right. And so it keeps you humble. But again, to get back to your point, I'm also in this camp where I just can't believe the sentiment, especially on the retail side and largely the rest of crypto, outside of Bitcoin, let's say, is so incredibly negative. And then I turn to the institutional side, which is where we do most of our work. And all of these points are just so incredibly positive. There's just such a divergence there. It's hard to believe. But where you do see the data showing this a bit more is with the Bitcoin Dominance Index. So I think we're well above 60, going higher. If you take out stable coins, it's even higher yet, which I think is a better measure. And that shows you that this cycle, or at least this cycle, has morphed into one that's really focused on Bitcoin this time around. And I'm not saying that's necessarily good or bad, but just an observation of this is where the capital is allocating their time and their resources, and obviously their money. So it'd be really interesting to see how this plays out and why this cycle is probably a little bit different as well.
Mm-hmm. I'm super happy that you brought up Bitcoin dominance, because that leads into the question that I think is on our listeners' mind, because of a lot of our listeners have probably missed the Bitcoin trade this cycle with a big part of their portfolio. Maybe they were holding Bitcoin with part of their portfolio, but they certainly were probably more in Ethereum or more in Solana or more in the other assets that have not. I mean, Solana's done great, although it's down right now. But if you were buying it back at $8 post FTX, wow, what a trade! You've done amazing over the past 2 years. But if we look at other L1s, other fundamental digital assets, we don't need to talk about meme coins. What's your thought on those?
So I listened to one of your recent podcasts the other day, and I think you were saying it to your guests. You said, like, oh, you finally figured out this idea of Bitcoin and then everything else. Mm-hmm. And that has been one of the key things that we've really taken a stance on. So when I started going on over almost 4 years ago now, the very first piece I wrote with the analyst that was on our team at the time, Jack, was called Bitcoin First: Why Investors Need to Consider Bitcoin Separate from Everything Else. And we've really kept to that. To be very clear, this is not to say things other than Bitcoin don't have value or can't succeed or investors shouldn't consider them. We were just saying you need to put Bitcoin in its own bucket. It's competing, in our opinion, as an aspiring store of value, a potential monetary good. So things that matter here are decentralization and security foremost, and then the network effects of a monetary good. That's what it boils down to, that network effects and adoption, right? Now, everything else makes a trade-off on those things, security or decentralization. Not necessarily a good or a bad thing. I always use the analogy of, tell me what the best vehicle is. Well, nobody can answer that unless they tell you what they're going to use the vehicle for. Are they going to drive back and forth to work and need something good for gas, or do they need something like a four-wheel drive pickup to do their job out in the wilderness, right? So these other projects, they all have different characteristics. So as an investor, you need to put on a different lens when evaluating them. And you really need to put on more like a venture capital lens. So the classic in venture capital is like, out of 100 VC projects, half of them will maybe break even, most of them will fail, and only a few of them will become 10x or even 100x. So to your point of these people expecting 100x, they need to know they need to know the data and the math behind this and the actual probabilities of that. And they need to properly size their positions accordingly and have that mindset when looking at that and be cognizant of those risks. So that's been our stance from day one. And I think that's still going to hold true. But obviously in this cycle, I think Bitcoin is obviously the most proven. It's never been hacked. The network's really never been down. It's the longest lasting, the most secure, decentralized. All these other things are going to have to prove themselves in other ways, and they're going to have to find the right product market fit. So take Ethereum, for example. The ETH priced in BTC ratio continues to just fall off a cliff. I think it's down over 50% year to date here. Our analyst Max has a lot of great work on this, where maybe they're playing the long game here, where they're willing to sacrifice some of this market share and not compete with some of the things out there in order to remain true to what they want to do, which is be the most decentralized smart contract platform. But again, we'll have to see if that plays out. I think it definitely could, and it could be very, very beneficial for them. But it does come with more risks, and it does come with more a longer time frame that they have to work through. And again, they're going to have another upgrade here soon, so we'll see if that moves them closer to that or not. But those are just some of the things and questions we think about. We're always putting in that investor lens and making sure investors are aware of what they need to consider.
Mm-hmm, mm-hmm. Well, and right now, if you look at the on-chain data, the story on Ethereum is stablecoins, which it has strong dominance in, and stablecoins. Obviously, if you don't know about stablecoins and the future of stablecoins and the belief and the enthusiasm for stablecoins, I don't think you're living under a rock. I mean, I can give you 20 past episodes that we've done on this about adoption and all of that. So I think the use case of stablecoins feels proven, and the future feels proven. I mean, one of the most bullish lines I saw recently there was Scott Bessent saying, okay, we have the US debt problem. Who's going to buy our future debt, right? We have all this debt that we need to refinance by the end of June. Who's going to buy that? A lot of that debt was on short term from the past few years, and we need buyers for that. And there's not as many, as you said at the beginning, there's not as many global buyers as US debt as there has been in the past, because they want to move away from a US dollar dominated global currency. They want something that's apolitical. Well, Bitcoin could be that. So point for Bitcoin. But point being, Scott Bessent said, hey, you know who's a big buyer of US debt? Stablecoins. USDT Tether is one of the biggest holders of US treasuries now in the world. I can't remember exactly where it is on the list. I think it's like top 20 or something like that. But so there's so much belief in stablecoins, which, okay, then you say, okay, where stablecoins happening? A lot of it's happening on Ethereum. Okay, great. Point for Ethereum. But I agree. I really do find that where I'm struggling right now with my thesis on Ethereum and Solana is I'm still a big believer in them. It's the timeline that I'm very unsure about right now, because I do see this decoupling happening. I think Bitcoin is out on its own now, even though the data might not quite show it yet. I'm just, my spidey sense is telling me we're going that way. I think you and I would agree. And I think that what that means is, yeah, I feel good about Bitcoin for the rest of the year. Ethereum and Solana and the other L1s, and we could talk about DeFi tokens as well, some of the apps. I feel good long-term about them. I'm just not sure on the timeline right now. I don't know if it depends on how the macro side goes and how big this growth scare is. If growth does go down a lot, then as you said, you kind of got to treat these more like they are, like they're tech stocks, which they would be impacted by slower growth. We would see slower activity on chain if growth slows, which would say, hey, less is happening on Solana, less is happening on Ethereum. Those fundamentals go down, then their price action might. I don't know if we're going to go down further from here. I mean, Ethereum seems to have found quite a nice floor recently, which is kind of surprising to me. I half expected it to nosedive further. So needless to say, I don't know if you have any thoughts to add there, but I remain long-term bullish for sure on the fundamental L1s and fundamental DeFi tokens, but short, medium term, I'm a little less certain right now.
Yeah, and this gets I don't want to get over my skis. That's why I hire people smarter than me to cover some of the DeFi stuff. But I agree on the major thesis here of Ethereum's got the stablecoin market. Stablecoins are, I totally agree with you, absolute killer use case, perfect product market fit, absolutely exploding. I think in our look ahead, we said we expected to go a lot higher. We expect tokenization to be multiple times higher than it was at the end of last year, at the end of this year. We're already seeing that. Most of that tokenization is happening on Ethereum as well. And Ethereum still has a lot of the DeFi apps. And to me, that signals that investors and developers really do value more of the security, robustness, and decentralization of Ethereum because they're doing their more higher value, high risk stuff on there. Like if you're going to do DeFi involving actual money and loans and all these products on there, you want the more secure one. Whereas if you're going to trade meme coins, that's more of your play money or fund money, perhaps, to put it lightly. And so you don't care if you're going to go to something like Solana. At least that's the current setup. Now, of course, that can change and these things can improve or deteriorate. But I agree with you that this technology is not going away. You're not going to stop stablecoins. You're not going to stop tokenization of things. So fundamentally, this is a new technology, a new paradigm, just like the internet was. And so, but the question, of course, is, are these first movers, Ethereum, Solana, going to be the winners? And that's where I fall back a little bit on my equity analyst background of you had a lot of companies during the dot-com boom start out of the gate, but then it was other ones that some of them didn't even exist in the early dot-com booms actually become the winners. And that's what investors need to be aware of. They need to correctly see and find where the value accrual is actually happening, and where some of these other projects are going to be, completely priced out, or their margins are going to go to nothing and be pushed out of the competition that way.
Mm-hmm. I got to use this as a plug for tomorrow's episode. In tomorrow's episode, we actually break down Ethereum versus Solana, looking at their economic value that they are generating. A lot of FUD on Ethereum right now because in March they hit the lowest revenue that they've hit in, I think, 5 years, since 2020, that they've been this low in a month. So that brought a lot of fear, and we break down what's going on in compared to Solana. So if you guys want to learn more about that, listen to tomorrow's episode. Chris, been an absolute pleasure to have you on the show today. Any final thoughts to share with us before we let you go?
No, I think just in all this volatility, like what you said, take a deep breath, zoom out. I always tell people, go over your original checklist for your investment thesis for something like Bitcoin or whatever it is. Have any of those fundamentals changed with the recent news? Hash rates at all-time highs, network activity is still high, it's still secure. All of the fundamentals for something like Bitcoin, in my opinion, remain intact. All of this other stuff is therefore just noise, right? But of course, it can differ for everything else. But that would be my parting words there.
I couldn't agree with you more. Chris, thank you so much for your time today. Truly appreciate it. Shout out to you and your whole team at Fidelity Research. Really appreciate you guys.
Yeah, this has been a lot of fun. Thanks for having me.
I've said it before and I'll say it again. Truly appreciate each and every one of you for showing up and listening to the show. Thank you for your trust and thank you for your time. I know the world is crazy busy and you guys have limited time. But that being said, I would love to spend some time with you guys in person, hanging out, having a beer. And I'm going to be at Consensus in Toronto in May, doing podcasts live on stage. We've got tickets at discount from a partnership with the team over at Consensus. Hit the link in the show notes, get your discount, come to Toronto, my hometown, one of my favorite cities in the world. Would love to hang and have some beers. Hopefully we'll see you there. Have a wicked awesome weekend, everybody. Thanks for listening in. As always, if you liked today's episode, please hit subscribe and make sure you follow us so you don't miss out on the next one. There's also a link in the description to our free 5-minute daily newsletter where we simplify crypto for you while making you laugh. And if you're willing to step up your crypto investing game, we're going to also leave a link for Milk Road Pro. You get access to our portfolio where you can see exactly what we are buying. This is your number one resource to help you invest successfully in crypto. One final note, this show is for educational purposes only and nothing we say is financial advice. Investing in crypto or any asset is risky and you should never invest more than you can afford to lose. Thanks so much for listening in, my friends. Have a wicked awesome day.